everyone. We have an update from Pure Cycle Corporation. It trades on the NASDAQ under the symbol PCYO and is a diversified land and water resource development company who possess a lucrative portfolio of land and water rights in the fastest growing sector of the Denver metropolitan area. Please welcome his president, Mark Harding. Welcome back, Mark.
Thank you, and glad to be back here. Really what I want to do is give you a quick update. Since we last connected, we were able to close out our fiscal year in and we're reporting earnings. So what I'd like to do is update your audience about the terrific year that we had and give you a little bit of color towards that. So with that, I'll run through a quick slide deck here. You all are familiar with the forward-looking statements that are not historical facts contained or incorporated by reference are forward-looking statements. Just to give you a real reorientation, we operate in three different business segments. We have valuable water rights in the Denver metropolitan area, in an area where you can own water as a commodity. And then we are a land developer. So we have a master plan community that we're developing in the most attractive sub-market in the Denver metropolitan area along the I-70 corridor. And then as a component of that, we also retain some of those lots that we develop for our home builder partners and contract with our home builder partners to build homes on that for our own portfolio so that we have a portfolio of single family rentals with them. So as I mentioned, our fiscal year end is 8/31, and we did complete that, filed our financial statements just before the Thanksgiving holiday, and really want to just highlight the fact that, we continue to really monetize these assets, both the land and the water assets. And 2024 was a record year for us. We had record revenues. We had almost 29 million in gross profit. I'm sorry, 29 million in revenue with about 19, 20 million in gross profit, and really generating these high margins just because we purchased these assets right. We have been very fiduciary about developing these assets and really continue to see terrific margins from both the land and the water side. If you follow those through and take a look at really the consolidated metrics here, our net income was a record as well, about $11.6 million and about 48 cents earnings per share. So it gives you kind of a flavor for the continuing growth of the company. This year, for a change, we're able to provide a little bit more insight into how the company's not only performing year over year, but also what it is that we're looking to give you a little bit of guidance as to whether or not this year was a one-off or whether or not we do expect continued performance on this. And I really am thrilled that each of these segments are continuing to produce shareholder returns. So what this is doing is giving you kind of a foreshadow of what we're forecasting 2025 to look like. And so while 2024 was a record year for us on revenue and gross profit, it also looks like that trend is going to continue. So we're looking at, increasing the top line revenue and then increasing our margins also for the next fiscal year. Together with that, taking a look at how we translate that to the bottom line, net income will continue to grow as well as earnings per share. So really excited about the fact that these investments that we've made over the number of years are really starting to generate those returns. We're reaching the meat of the market in terms of delivering lots for our master plan community and partnering with our home builders on that. And maybe some of the color on that kind of gives you a foreshadow of why we're so optimistic on this. If you take a look at each of our three segments, our utility segment, we provide water and wastewater to those master plan communities that we develop. And then we also operate and maintain some other municipal water systems in the Denver metropolitan area. But if you take a look at the capacity of our water utility, we're still very, very early on in that. We're only about 2% developed. Our water portfolio has the capacity to serve about 60,000 connections. And we get that, we get two fees for that. We get a large upfront fee, which is a capital fee. That's closer to about $40,000 per connection. And that's usually paid by the home builder. They pay that at the time they get a building permit. And then this also gives you kind of where our revenue fees are in comparison to other Denver area water providers. And as you can see here, tap fees are exceeding $50,000, approaching $60,000 per connection in some of the water providers throughout the metropolitan area. And then we generate about $1,500 per connection per year. So there's still a tremendous amount of runway left in the utility segment for us as we continue to grow. Taking a look at just the Sky Ranch community, our master plan community that we're building out right now, we're about 18% developed. So we have about a little over 900 completed lots. We have about 700 current residents out there. And then when you combine the residential lots, which will be about 3,200 lots together with our commercial lots, which are our most valuable property, and that's yet to start, you're seeing a lot of strength in our lot pricing. When we started this project, we were getting about $73,000, $75,000 per lot, and now those lots are about $125,000. Again, tremendous opportunity. We're still just getting started, so plenty of pedal left in the land development side. And then in our single-family rental segment, we control these because we are the developer of the master plan community, and we've got a target of about 200 single-family homes as a benchmark in this. And the nice part about this is each home that we retain for that, because we are able to retain the equity value of the land and the water, we have about $150,000 of equity value per home. And as opposed to generating that $1,500 per connection per year revenue, we generate about $33,000, $34,000 in annual rental on the single family home side. So each of these segments are still very early in their maturities, and the company continues to put out great revenue. So if you haven't had a chance to take a look at us, just jump over to our website at purecyclewater.com. You can listen in on some of the more detailed presentations that we have there. And if you have any questions, don't hesitate to give me a call. So with that, Anna, I'll kick it back to you and see if you got any questions with that quick update.
Fantastic. All right. Aria asks, how much unimproved land do you own, and are you going to be developing any commercial assets?
That's a great question. Again, if you go back to that development slide, we have about 700 acres that are remaining to be developed. And of that 700, about 150 of that's going to be commercial. And so we do have extremely valuable commercial that fronts the Interstate 70. We do have an interchange right at where we were at. We're actually going to build a new interchange there. And we have sort of a tax-based revenue incremental financing opportunity to fund that interchange set aside for that. And that'll start probably sometime next year. But the commercial land, as you might expect, is going to be the high value land for us. And we're very excited about continuing to monetize that.
And Chris asks, with the massive appreciation in real estate over the past 24 months, how are you handling that appreciation on the books? And are you now capitalizing on the value with sales to developers?
I wish we were able to demonstrate that more. I mean, just the GAAP accounting only allows you to be able to record what you have on the book at a cost basis. And the interesting thing about this is our master plan community will generate close to $700 million at build out. And, we still have 82% of that to be built out yet. So we're still yet to see some of that. And our market cap today is only about 300 million. So we've got almost more than a doubling of the value of that baked into the assets that we have. We will continue to monetize that. And what you're going to see is you're going to see extremely high margins just because of our low cost basis in the lots.
And Daniel wants you to comment on the relative competitiveness of the housing product that's under development in Sky Ranch.
It's a great question. The biggest advantage that we have is our market segmentation. And one of the statistics I like to reference is the fact that before the real estate downturn, and that would be, we'll call that the 2008, before 2008, roughly half of all home starts in the Denver metropolitan area were started in that entry-level product basis. And what we have defined this at this time is entry-level is anything less than $500,000. And that's hard to say just because of the home affordability. But that entry-level segment has whittled down from 50% back in that 2000 to 2008 period to less than 4%. And so the biggest advantage that we have going for us is not only is it our location, but it is our affordability index. And that's really where we get the strength from our home builder partners we're partnering with Lennar, D.R. Horton, KB, Taylor Morrison, Pulte, all of the key national home builders, and really delivering a high quality product at that entry level price point.
Wonderful. Do you have any closing remarks for our viewers today, Mark?
No, I'd just like to say that, we're really excited about the fact that these infrastructure investments that we've made, coming out of the ground is always a lot harder than continuing to expand your community. And so a lot of those offsite investments have been made, and each incremental phase that we bring online. And I mentioned that we had developed 700 homes. We got 700 residents out there, and we've got 700 lots at various stages of production. So we delivered 230 lots this fiscal year. We've got another 500 lots under production that we're going to deliver in 2025. And so keep an eye out for those continuing record performances out of our financials for our shareholders.
Fantastic. Well, thank you so much, and we'll see you in 2025.
Thanks very much. Take care.
All right, everyone. We'll be right back.